Hey guys, there have been a lot of earnings in the last couple of weeks, but there is one company that I get the most requests to do an update video on. That company is Air Products. So I want to update everybody on this holding, on the earnings call, and let's just kind of talk about whether we want to buy, sell, or hold this stock. Hey guys, Kevin Burgess back again with another video. I'm super glad that you're here, and we want to talk today about Air Products and chemicals. But before we get started there, if you like videos like this, consider subscribing to the channel. Give this video a thumbs up. It lets everybody know that the content in here is worthwhile. Here at Wealth Circuit Investing, we are about inspiring passive income investors. One of the holdings in the Wealth Circuit Investing portfolio is Air Products. Air Products is a maker and distributor of gases that are used in a myriad of different applications. As you can see on the title slide, they are down over 15% this week. And we want to talk about whether it is time to bail or whether it is time to buy, or whether it is just a hold for now, and let's see what happens. So here's a couple of the questions I got from, one was from YouTube and one was from the Discord that I've set up. I'll talk about that more at the end of the video, but if you're interested in joining our Discord, it is in the comments below. You can just click on the link and join, and I'll tell you more about that later. But first, we have Teresa. Yesterday, she sent a message and asked if I would revisit APD after the last earnings. It is at 215 now. And so, Teresa, absolutely, that's what today's video is going to be about. And then also we got from Samarizon 1980, is APD a buy, Kevin, at these prices, or is China affecting the stock, and wait and see how far it dips? So I think what we're seeing here is that we've got a lot of movement in the stock, especially the last couple of quarters. And so the question is, do I hold it? Do I buy more? Do I sell it? What do I do at this point with Air Products? So without further delay, let's get started. You can see here that Morningstar has updated their information. They say that Air Products is poised for rapid growth over the next few years because of its 10-year capital allocation plan. Then they go on to say that the industrial gas firm aims to deploy over $32 billion during the next decade. And of that $32 billion, they have either spent or committed over $19 billion of that. So basically what they're saying is that Air Products is building infrastructure, building capacity, building capabilities, and they're spending money to do that. Morningstar goes on to say that we are bullish on Air Products' long-term prospects, and then they say that the firm's ambitious capital allocation plan will fuel tremendous growth for many years to come. And they've updated the fair value of Air Products. Before the earnings call, it was $314 per share fair value. It is now $288 per share in fair value. You can see here that Morningstar rates the moat as narrow, and they say that their capital allocation is exemplary. That puts APD, Air Products, at a 24% discount, even after the reduction of their fair value. So now let's see what Simply Safe Dividend says. They're saying that the free cash flow will fall short of covering the dividend over the next couple of years until these long-term investments begin generating profit. Those are the $32 billion that we talked about. Secondly, they say that S&P, which is Standard & Poor's, who rates the debt of companies, agrees that they will have no trouble funding the debt of these large capital outlays, and they are reaffirming the company's A credit rating and stable outlook that it was just a couple of months ago. Then lastly, they believe that the company will continue, this is Simply Safe Dividends, believes that the company will continue to adapt and grow over the long run. So therefore, Simply Safe Dividends has a safety rating of 95, which is very safe. And one thing to point out is looking at the payout ratios. From an earnings perspective, the payout ratio looks fine. It's around that 60%, Moving forward, it'll be around a 56% earnings payout ratio. But you can see in the free cash flow payout ratio where these additional capital investments are coming in and actually driving the free cash flow payout ratio negative. Is the free cash flow payout ratio by itself a reason not to buy more of the stock? Well, let's keep going. Next, I look up on tip ranks. We've got APD at a moderate buy with 13 ratings. There's 5 buy ratings, 7 hold ratings, and 1 sell rating. So it's a bit mixed in what the analysts believe we should do. And then looking at the analyst projections, obviously none of them predicted this drop in the price for Air Products. The lowest was $240. The average was around 266 and the high was around 320. Obviously, that 320 is a bit out of range at the moment. A quick view of insider trading. You see here that Seifi Ghasemi has bought on November 7th. He bought $2.5 million worth of stock. And on November 12th, he bought $2.9 million worth of stock. Then we had one small sell from Jeffrey Kutz. He sold about $40,000 worth of stock. I don't think that's any indication as to whether we should buy or sell. But Seifi obviously believes in the company as he's invested about $5 million here recently. Another thing to point out is that last quarter, they gave guidance for fiscal year 24. They said that adjusted earnings per share was going to increase about 11 to 14% with an 11% CAGR over the last 10 years. That was last quarter's guidance. This quarter's guidance shows only 6 to 9% in fiscal year 24. It's still an 11% CAGR just because of the way the math works. But the point here is that the guidance has decreased. Instead of 11 to 14% growth in this year, it's going to be 6 to 9%. But, I'm sitting here going 6 to 9% growth in a single year. That is a horrible year from an economic perspective. It may not be so bad. So let's keep going. I went through and thought about the risks and the risk mitigation, and then what am I going to do moving forward? So first of all, business in China is slower than expected. Second risk that's different now than it was a quarter ago, their helium business is underperforming. The third risk is that their forecasted EPS is now lower than they had forecasted in the prior quarter. And lastly, they have significant cash investments, which will create negative free cash flow and higher debt over the next couple of years. This one is not totally different than what we've seen in the prior quarter, but with business slowing down, that means the operating cash flow will likely slow down, which puts more pressure on adding debt to pay for these capacity inputs. So those are the new risks as I see them. Let's see what they're doing to mitigate those risks. So first of all, they have a long-term perspective for the management to prepare for the next economic upswing. So let's think about this from a business perspective. The volumes are slow right now. So you would think that the natural inclination would be that management would kind of draw everything in, not spend cash, not grow the business. We're going to get a defensive posture here and wait for better times to come. What Air Products is doing is they are actually going on the offensive, and they are building capacity. They're building facilities. They are preparing for the next upswing in the economy. And that risk mitigation hits you differently if you're a short-term investor versus a long-term investor. We'll talk about that in just a couple of minutes. Next, the company continues to be very profitable, at least through 2024. We saw on the previous slide that even though they have reduced their projected growth in earnings, they are still growing earnings, and they are very, very profitable. The third mitigation is that they have lowered their dividend increases. They just announced an increase. It was a lot lower than expected. And they even got a question on the earnings call about that. So Seifi's response to the question was, we're targeting about a 2.5% yield. So therefore, why would we increase the dividend more? What the investors hear, what the analysts hear, when they say that is we don't have a lot of confidence in our future forecast. We're not really sure how long this downturn is gonna be around. So we're gonna hold some of that dividend cash back. But you know what? I think this is actually a good move for the company. We're gonna use some of those dividends to help pay for these capacity expansions, and so that we're prepared when the economy returns. I think it's a good move for the company. So what should I do? Should I hold it? Should I buy it? Should I sell it? And I think that depends on your perspective. So if you have a short term perspective, if you're looking to buy the shares and have those shares kind of pop here, the demand for products supplied by Air Products could be low for the near future, and the stock price will likely remain low based on this. If you're a longer term investor, then you're looking at them having a solid balance sheet with a forward vision by management. And you know that long term, the stock price has a high probability of rising. So, which one of these perspectives do I have? Well, I am actually a longer term investor. So, my perspective is the WCI portfolio, the wealth circuit investing portfolio, will likely add more shares in the future. Those of you who are on the Discord know that I'm transferring funds from one account to another, and I'm kind of locked out of my portfolio at the moment. But once that's opened up, it'll probably be maybe early next week. I do plan to add more shares of Air Products. I want to average my cost down and also capture some of that 3.2% yield that's out there on their dividend. So there you have it. That's my take on Air Products. I think it's a great long-term business. If you said, "Hey, I think I'm going to wait and not enter for a little while," I would say that sounds like a decent strategy to me. Just don't wait too long. And if you got a short-term perspective, it's probably not the right stock for you. So those are my thoughts on it. Couple of other things I want to share with you. One is I've started a Discord server. If you're not familiar with a Discord server, you should try this out. Let me give you just a quick flavor of this Discord server. You can see here that there's a bunch of different channels in here. So it basically organizes the conversation. And you can see that there's a lot of good conversation going on. A lot of it is stock related, but we also have people getting to know each other, and they're sharing their views. This really makes for a good dynamic flow of information. So if you're an investor and you want to be a part of a group like this, just click on the link below, join the Discord server, and I look forward to seeing you in there. I'm in there quite a bit, and there are also over 60 other people who are participating and sharing information about stocks. It is absolutely free. Just click on the link below. So we look forward to seeing you join the Discord. And then if you want to become more involved in supporting the channel, just follow me over to Buy Me a Coffee. You can either follow this QR code or you can click the link in the comments below. So if you are interested in supporting this channel so that we can continue to make great content moving forward, follow me over at Buy Me a Coffee and see how you can play a part in the Wealth Circuit Investing channel. So I hope that was helpful. Leave me a comment below about whether you plan to buy shares in Air Products, whether you're going to hold what you have or whether you're going to sell. Let me know. And also, if you want to join us in the Discord, we can have that conversation there as well. Either way, I want to hear from you. Hey, thanks for joining today. If you want to see the video I did on Air Products last quarter, I'm going to put that right over here, and I will see you there.